All right, here we go. Stocks by the numbers. Welcome back. And I wanted to go back and do something that we used to do, which is kind of like the earnings predictions and the earnings updates. I know there's only about 3.5 hours as of recording this video now, so I don't know how many of you will happen to see this. But again, these are just my opinions. But full disclosure, as I'm sure you know, earnings, complete coin toss, right? We know it's a 50-50 gamble. Even sometimes if we buy calls and the company posts a good quarter, they end up pulling back on weaker guidance or some potential issues that analysts might raise after the earnings call or something like that. But I just want you to understand the risks involved. 100% a gamble. Let's get into it. First company I'm looking at here, we go over to Earnings Whisper. We can see Apple is reporting earnings today after market close. And you can see estimates on the EPS side, $2.34.8. Revenue, $124.26 billion. Now, that's because this is the holiday quarter, right? Period ending December. And if we go back 4 quarters ago, you can see estimates were about 118 billion. Company post over 119.5 billion. So obviously, this is their best quarter. My biggest concern is, again, I feel that we may have seen some belt tightening. And I know people are pumped about some other tech stocks that recently reported some strong numbers. But I have a feeling that, like our data centers and the software companies, we had IBM with a great beat. I just feel like the software, the data centers, the AI, I feel like that's growing more than potential physical hardware device sell. Now, again, this is just my opinion, but right here looking at it, I mean, Apple isn't too overvalued in the numbers. We got about $3.5 trillion market cap, trading 39 times earnings. Look at that beta. Again, about 3/4 as volatile as the market. But we can see last quarter, big miss on the EPS side. And this time last year, 218 they posted on estimates of 210. Now we're up to 235. And again, the revenue, 125 billion almost, right? Yeah, 124 and a quarter. So, it seems like they're swinging for the fences, and I know it's a hard company to bet against, but in my opinion, I might lean towards Apple puts here today after the close. Next company up, Intel. Now, Intel, this is going to be a hard one to call because I mentioned in my opinion, I personally like the backup tech players that people don't really talk about and the ones that they took the spotlight off of. Right? And I've mentioned stocks like AMD, which I know has been a little rocky, but I personally still believe in it long term. And I've spoken about stocks like Intel, and I've spoken about stocks like IBM as well, the SMCIs of the world, right? So right here in this moment, of course, it would kind of be difficult to predict how this company is going to report because we know they've been going through a rough patch for the last couple of quarters. So if you're leaning more towards the put side, pretty understandable in my opinion. However, again, I still say that when Trump was elected back in 2016, I believe Intel was one of the first companies to announce an investment back here into the States and build that new plant. Now, I do understand they lost market share. However, last time we looked at the stock, in my opinion, it looked pretty decent in the numbers. I think I put fair value at like $24 a share. And I just mentioned overall that in my opinion, there's value there. Similar to what we saw with US Steel. And then I know the ideas were floated like, oh, is Qualcomm going to buy out their foundry division and whatnot? So that's why, again, obviously, it's not going to move until news like that hits. But in my opinion, the point is, I just still think there's long-term value there. So, again, I may be swimming against the stream here for this earnings report because, again, we know it's a gamble. But with the stock sitting here at sub 20, believe it or not, I would actually lean towards Intel calls, in my opinion. Next company up is Visa. Now, I mentioned in the Discord, I don't recall, wow, stock broke up and out to a new high today. I don't recall if I mentioned it in a video, but I did kind of float the idea and speculate that with the economy potentially getting stronger with a stronger US dollar, I was speculating that first of all, insurance companies, right? Premiums are probably going to come down. So I mentioned in the Discord that I personally wouldn't be looking at any insurance companies right now, even though I know they've been doing very well over the last couple of years. And same thing with credit card companies as well, right? So right now, Visa, I mean, I guess you can kind of just go with the flow. And, stock popping 2% on anticipation of these earnings hitting highs. Wall Street is probably leaning in favor, like 80-20, that a company like Visa is going to beat earnings because they've just been rocking and rolling, really, for the most part, going back years and years and years. I mean, look at this. Look at that growth here. Look at that growth. I know we just backed up like 10, 11 years, but I mean, this is just absolutely phenomenal. And they pay you a dividend to own it, right? And I kind of said the same thing about AXP, which is American Express. So right here in the immediate short term, I can appreciate the fact if people want to lean towards calls. Believe it or not, after this big run up, I might actually lean towards puts, right? Because you can make the argument that it's already factored in and the stock completely took off. And, look at this. We're talking like 8 of the last 10 sessions have been green, and the stock is consistently hitting new highs along the way. So we can make the argument that these earnings are potentially already factored in. So in my opinion, in the immediate short term, I might actually lean more towards Visa puts, in my opinion. But overall, in the long term, I'm just speculating again. We haven't heard any updates from the Trump administration about this topic, but I have a feeling that they're seeing the interest and debt burden on the average American citizen. And I know Trump potentially floating the idea of getting rid of the income tax. So I have a feeling that he's going to potentially strengthen the US dollar while restoring the power back to the American citizens. Again, this is just my opinion. And I have a feeling that these massive, like 26%, 32%, like APR interest rates and whatnot on these credit card companies, I actually think that is going to be a priority of this administration to bring those percentages down to help out the American public. Now, again, that's pure speculation. That's just my opinion. But here in the immediate short term, again, I think it's already factored in. I would consider Visa puts. And over the longer term, if I was, again, hypothetically, if I bought Visa like back here, and now I'm up like 100, now I'd be up whatever, like 70% with dividends. Believe it or not, in my opinion, I would potentially look to start trimming and look to find some other maybe brand name American companies that might be undervalued in the numbers, maybe do a little PE hunting, right? But that's just my opinion. I would lean towards Visa puts. Deckers, DECK, I believe this also got listed on the S&P, did it not? Didn't we do a video? They got moved over, right? DECK has really been on fire. Again, this is the company, I believe they make Uggs, but the company just consistently beats on EPS and beats on revenue. We had a stock split going back, about 4 months ago. They did a 6-for-1 split, and then they come out, look, estimates on revenue jump up to 1.2 billion. Company posts over 1.3, $1.59 a share on estimates of 123. So we come over here now, and again, I know we're coming out of the holiday season, estimates up at 1.73, analysts expecting EPS of $2.58.2. We have market cap 34 billion, 38 PE. EPS has been solid. And let me see again. They posted 252 on 191 this time last year. And now estimates are at 258. So we're technically only looking for a slight bump in the EPS. The problem, what they post? 156 on 145. Yeah, see, believe it or not, in my opinion, the EPS probably isn't going to be an issue. The revenue is going to be an issue, in my eyes. Yeah, it really is on the up and up. So 4.25 billion, so roughly bringing in a total of about 5 billion, and that was last year. Well, technically the year prior, but you understand what I'm saying. So about 5 billion for the year, and let's check like their debt and their cash real quick. Yeah, look at this, very low debt, 250 million. Got 1.25 billion in cash, right? So cash outweighs debt by roughly 1 billion. We got assets outweighing liabilities, both in the short and the long term. Equity consistently increasing, about 2.25 billion plus the billion cash. Now you're at 3.25 billion plus the 5 billion they brought in last year. So now you're at roughly 8.25 billion with a $34 billion market cap. So that is what, roughly 4-ish, about 4 times. You know what? In my opinion, I would give them the benefit of the doubt. I would continue to ride that positive waves. I would continue to ride that positive wave, and I would maybe consider calls on Decker's Brands DECK today after market close. Baker Hughes is a name I used to watch back in the day. Okay, they've been on the up and up. Baker Hughes, what is this? Awarded LNG contract from Venture Global. Just continuing to look good. Baker Hughes probably going to have a decent couple of years. I know the drilling company, 43 billion market cap, dividends right around 2%, pretty low PE there, about 19. EPS has been very solid. This time last year, 51 cents. Now we're looking for 62 cents. Annually, numbers are curling, very nice. We're back to, yeah, look, the company had a positive net margin before lockdowns, and for 2023 finally got back up to that positive net margin, bringing in over 7.5%. But we're looking at what, like 27.5 billion. Been looking pretty good. And this time last year, they actually missed on the revenue side. And we had the stock drop down. What was that again? 683, estimate 693. Now we're looking for 707. Let's check the numbers real quick. Debt up at 6 billion. Dividend holding steady, slightly increased the last couple of years. Debt 604. Free cash flow improved. Cash is down. So that's about 3.4 billion negative. Assets outweighing liabilities. Equity consistently increasing, so that would bring us down to about 13 billion. Plus about 27, so that would put kind of quote-unquote fair value at around 40 billion. Yeah, you could make the argument that it's undervalued. Now, of course, again, it would be hard to determine definitively if this company is going to beat or if they're going to miss. But I will say this, as an earnings play, of course, a little bit of a toss-up. They did struggle with the revenue this time last year, so because the estimates are above 7 billion, possibly I would lean towards puts, believe it or not, on Baker Hughes, BKR. Over the long term, I actually think this company might be undervalued in the numbers, as we just saw. So over the long term, it could be good. Here in the immediate short term, I can appreciate the fact if you want to go puts. And I wanted to look at U.S. Steel as well. U.S. Steel, we have earnings coming out. U.S. Steel, despite the big run up with the bidding war and then going underneath the radar, and you can see these big pops and these big drops, right? When like Nippon Steel would try to push it through and try to do the right thing, the stock would start to climb back up. And then you would get news that, oh yeah, Biden said he's blocking the deal. Boom, we'd drop back down here to the 20s. And then we would immediately go back up because I always mentioned that there is value here. And even if we subtract the Japan Nippon Steel bid from the bidding war, I mentioned again that before they came out with that $55 bid or whatever it was, we had Cleveland Cliffs mention that they were willing to match the bid. And even before that announcement, we mentioned multiple bids coming in the 40s, right? So not only is, in theory, the stock worth what the next company's willing to pay for it, so conservatively, I would say somewhere between $43 and $45 a share really should be fair value. However, because the bids came in at 50 and above, that's really where the stock should be also. And I know that it does swing and it has been volatile, but the whole time during this bidding war, the company has slight miss there on revenue, but the company has consistently been beating on the top and bottom line. And now we're looking for actually a loss of about 10.5 cents on revenue of just about 3.5 billion. So, what was this high real quick? 37.75, 37.84. So not necessarily a double top, but we can kind of make the argument that we're heading upward. And I did mention in my previous Trump video that I personally am bullish over the longer term on American brand name companies and American material stocks. And obviously U.S. Steel Company. Market cap 8.2, PE down here sub 24. EPS has been solid. Again, last couple of quarters revenue looks like it was holding slightly above 4 billion. Last quarter slightly below 4 billion, but again, more beats than misses. So, in my opinion, I would probably consider calls on US Steel, ticker symbol X, and I would probably say the same for Weyerhaeuser. Now, we recently saw tweets online and videos of construction sites where they laid down the foundation for the homes, and supposedly a lot of workers didn't show up because they were afraid of, being deported with ICE. So I speculated and floated the idea of the ITB, which is the U.S. Home Construction ETF. And I'm floating the idea that if we have all of these homes built recently, and now we have homes that are half built, now it kind of seems like, after all the deportations, it seems like, in my opinion, that the supply may now be outweighing the demand here, at least maybe for the next year or two. And I know people are saying, well, you just said Trump's, reinvesting back into American citizens and making the dollar stronger, so won't people buy houses? Well, the way I think about it is, if you're stuck right now between a rock and a hard place, and Trump does make the dollar stronger, stretch the value of the dollar further, lower your taxes, right, so you have more income, then yes, you will potentially see more new home buyers, more first-time home buyers. But the problem is, we know you have to build up a little bit of liquidity so you can have the down payment and you can afford that mortgage, right? So, in my eyes, will it pick up again? Yes. When will it happen? Obviously, I don't know. I would speculate it would probably take at least 18 to 24 months. Make people's lives better. They're going to continue grinding along, but they're going to see their bank accounts growing. And then when they hit that certain break point, that's when they're going to go and hit the market and they're going to look for a piece of real estate for themselves. So over the longer term, I do like it. But something like ITB, maybe puts over the next several months, or maybe even a year-long put if you can, might be a decent play. But going back to Weyerhaeuser, again, I think the supplies, again, there's a lumber company, I think the supplies have already been purchased and have already been factored in. And you can see very slight miss last quarter on the revenue, good EPS beat, and you can see the company has slightly been missing revenue for the last couple of quarters. So this is one that actually isn't as rock solid, in my opinion, in the numbers as something like an LPX, Louisiana Pacific. But it does seem to be... Oh, it actually looked like a downward channel. Maybe it's not really a downward channel. Yeah, it's more like a trumpet, actually, going back about the last year and a half. Oh, no, I'm sorry. 2 years. And I'm viewing this as something where people feel it's necessary, again, lumber company, while at the same time, though, the company has been missing earnings, on the revenue side at least, pretty consistently. So, in theory, I like it, and also at the same time, I feel like they can't destroy it because it's viewed as a necessity, and while they are missing on revenue, they are slight misses. But let's check the numbers real quick. 22 billion. 2.6, 42 PE it's trading out right now. Beta slightly less than 1. Again, the beta volatility of the stock in relation to the overall volatility of the market. EPS has been solid. We're looking for positive EPS, 7 cents. Revenue struggling a little bit. Okay, so now we're going into Q4. Last Q4, 177. Now we're looking for 172. Lowered estimates with their consistent... You know what? In my opinion, I would actually say Weyerhaeuser calls. WY, calls on WY, in my opinion, going into the close. Because, again, they've slightly been missing on the revenue, so now estimates are slightly ticking down. And the company might be able to kind of pull the rabbit out of their hat and come out with a random surprise beat. I know, obviously, there's a bunch of other companies reporting earnings, but those are the biggest names, in my opinion, that are coming out. If you agree or disagree, let us know. If you're planning to do an earnings play on any of these companies or any other company that's reporting earnings today after market close, let us know down in the comments section. But, I just wanted to run down that list and just quickly give my opinion. But I did quickly and briefly lay out for you guys how I feel about most of those stocks in the short term and in the long term. So hopefully, a lot of that turns out correct. But, I try to give you guys a little path to travel down. But again, this is just my opinion. And we know earnings are a complete gamble, but it is fun to, take a shot with some earnings plays. So I appreciate the fact if a lot of you want action and you're taking some plays today. But those are pretty much all the names I wanted to look at, so I'll end it there. Once again, Stocks by the Numbers. Thanks for stopping by. Questions, comments, or concerns, leave it in the comments. But of course, I want you to like the video if you can. Subscribe to the channel if you're not. Obviously, that stuff helps me out. That's how you help me help you. More importantly, moving forward, like I always say, I understand markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.